Hi, welcome back to my channel. And this morning I just want to give a quick stock market update on what is going on in the stock market. First off, I want to say this is not financial advice. This video is being made for entertainment purposes only. But I want to talk about what is going on in the market right now. And especially in the tech stocks, the NASDAQ 100 and some of the other funds that are being heavily shorted right now. But what we have right now, the whole stock market as a whole right now is a mess, and the bear market, I believe, has just started. It's just getting started. It's just getting ramped up, and it's going to continue. This market is going to continue to decline for however long it takes until most companies get back to a PE of about 10 to 15. And they will. They're bringing all these companies down. You've seen it with Facebook, with Netflix, and many others. If you look at, let's just take the Cathie Wood ARK fund, ARKK. That fund is down nearly 70%. Every single company in that, besides Tesla, which is about 20% down from its all-time high. You take every other company in there, and some of them are down as much as 90+%. So every single company she picked and put in that fund is total trash. They're companies that didn't earn any money. They were all bought based off of hype, and that is what basically the whole market is basically like that. So a lot of these companies, they have a long ways to go before they come down to get to the right valuation, and they will. Apple had great earnings coming in. Amazon missed earnings yesterday, and both came down. This is a bear market. You have highly leveraged, smart money, big, huge money, and they are selling off. And what they'll do, if you watch these, a lot of the indexes will go down one day, and then they'll go screaming back up, flying back up, only to sell off again. Because this big money, what they'll do is they'll sell off, they'll take profits, they'll buy back in, make the price jump, get retail to come back in thinking it's safe, the bottom's in, only to pull the plug again to drain it. And they'll keep doing this until they wear the retail investor down and shake them out of the market until they sell out of their positions and the stocks really come down. And they're going to do this with Tesla too. And how they'll get Tesla to come down, there's already massive short positions on Tesla right now. They'll buy their short positions, they'll come back in, buy it, push it back up, sell, buy their shares as it drops, pay back the firm, the brokerage, their shares that they borrowed, keep the money in between. They'll keep doing this over and over until they bring Tesla back down to about $50 a share or $40 a share. And make no mistake, Tesla's going to come down to that. They will bring every single company down to about a 10 to 15 PE ratio. It's going to happen. So there's a lot of them have. Amazon's got a long way to go coming down to get to the right valuation. But this is what's going on in the market. And the reason they're able to do this now is because the Fed is no longer printing money. They're no longer going to prop this up. They're raising interest rates. They have to, because inflation's getting out of control. They have to get a hold on this, especially with the elections coming up, the midterms. So there's a lot of things at play here. And this big money, these people that have all this money and this leverage, they study all this. And they know, with the way the economy is right now, they can go in and hammer this market and bring it down and take the money. So what you're seeing, you're witnessing the greatest transfer of wealth in the history of the world right now, going from the middle class and the poor right into the hands of the super wealthy. This is the transfer of wealth. And why do you think Elon Musk came in before COVID? What was he worth? Maybe $40 billion, and now he's worth $280 billion or $270 billion. You don't amass wealth like that without taking it from people that wealth just didn't come out of thin air. Yes, they printed a lot of this wealth, but the money, by giving everybody stimulus checks for the last, when COVID happened, they printed somewhere like from between then and now, it was like $10 trillion that they printed. Well, that money somehow worked its way into these big companies, new Apple phones, all this stuff goes into these companies. And then the money just goes right back into the hands of the super wealthy and the rich. They wind up with all this money. And that's what's happening in this market right now. And, if you didn't sell your stocks when you were up back in November and January, back from November to January, you're pretty much going to get trapped if you haven't, because what will happen is you won't sell. You will see that, well, it'll come back, in a few weeks and a few months, and then it just keeps going down. It keeps going down. It gets a little bounce up, and you think, yeah, it's coming back, and then it goes right back down. And imagine the people that bought Facebook at $350, $370, whatever, and now Facebook is under $200 or right around $200 a share. Imagine the people that bought Netflix for $500, $600, $700. And it's under $200 a share right now. Just imagine being them. They're not going to sell now. They're holding the bag. They're holding bags. They might sell, but when they sell, it's going to get a lot worse. I mean, Netflix and Facebook could come down a lot more in their price. And they're going to do this to all these tech companies. One by one, they're going to hit these tech companies and bring them all down. And you're going to have a bear market where there's going to be, like in the NASDAQ, I'm looking at about a 60 to 70% decline. And in the S&P 500, I'm looking at no less than 50% decline in the S&P 500 from all-time highs. That's what I'm looking at. And that's what I've been studying. I've been keeping a close eye on this market. I've been watching what they've been doing to these companies. I've been paying attention to what our government's doing. I've been paying attention to a lot of what's going on. So it's, and it doesn't take a rocket scientist to figure this out. When you start really figuring these numbers and seeing what they're doing, they're going to bring everything down to about a 10 to 15 PE ratio on all these companies. And they're doing it. They're doing it. They're being successful. I mean, these short sellers are relentless. And look at all the hype, even the hype that was in AMC stock. They're shaking all these apes out. They're just shaking them out of their positions. They're massively selling AMC. AMC, from what did it get pumped to? $70. And now AMC is trading at a little over $15 a share. I mean, that's disastrous. And it hasn't worked out well for the apes. They're getting their asses handed to them. But this is how the market is. The market is brutal. It's relentless. And if you didn't, I got out of I bought QQQ positions. 340 shares originally I bought back in 2002 and 2003. I had two Roth IRAs that I started then, and I never put any money in. Those were just two Roth IRAs that I set aside, kind of a set it and forget it thing. Well, I bought 175 shares of QQQ in one of them, and 165 shares of QQQ in my wife's Roth IRA, and we had a cost basis of it was right around $28 per share. Well, I sold the rest of those back in November for $403. I got out of those positions. Now I'm still am in the stocks right now. About 55% of my money is in stocks right now. I took out 45%. I'm sitting in cash right now, as I'm waiting for better buying opportunities down the road. But like I said, I'm not buying any stock. I'm not coming back in to this mess right now until there's more stability and the companies are, where they're a buy. I'm looking for a deal. I'm not looking to pay, a lot for something. I want a good deal. So that's all I'm looking for in this market, is a good deal. And there's still no good deals out there. Everything's basically too high. And a lot of these, and I want to add to this video too, a lot of these prices were pushed up by index funds and 401ks. So people were buying it every week, so it was forcing these companies to buy stock for people's retirement. So a lot of these prices got pushed up just because of that. So, this bubble was helped out by index funds and that kind of nature of passive investing. So, but anyways, if you're doing any of that, like I said, this is not financial advice. I'm not saying to sell out of your positions. You're basically going to have to ride this out and see where this goes. But it could be years and years and years and years before this market comes back to where it once was. I mean, and some of these companies a lot of these companies are never coming back to what they were. I mean, just go back and look at 2000 with the dot-com bust. A lot of those companies never came back. And there's quite a few of them. I think Cisco's one of them that has never went back to its Intel is another one, I believe, that has never went back to its all-time high. But anyways, I'm going to end this video on that. But that's my market update for this week on what is going on in the stock market. Anyways, y'all have a great day, and I will catch you on the next video. God bless.